Citi has been calling the government's GST revamp a potential game changer. The move could trim inflation by up to 1.1 percentage points, though the actual impact may be smaller with a partial pass-through. But what's the fiscal math looking like? Will revenue loss be offset by higher demand and compliance, as the government is expecting? We've got none other than Sajeet Manghat right here in the studios. Sajeet, good to have you on ET Now. Welcome.
Thank you very much.
And what a day to welcome you to ET Now. What a day to be here.
It's a good day to be here in ET Now.
Yes, and what a big bazooka, Sajeet, from the government. I mean, you did get a hint and inkling when Prime Minister Modi announced that on the 15th of August, and it's here. One day GST Council meet and all of it got announced.
Yeah, and that too a truncated GST Council meet. It was supposed to be 3rd and 4th. Now they completed everything on the 3rd, which shows the kind of consensus which has been built up in the GST Council. But more important, they've taken some bold measures, which is there, especially with respect to insurance, which is a much debated subject. And I think we had guests during the show, in today's show, which spoke about the fact that the concerns about input tax credit is not that much, because hospital rates are also going to come down in that sense. So the pass-through could be much more. But the markets have been very flat, and one of the reasons why it is that way is the expectation that the pass-through may not be entirely which will go to the consumers, and that's what is one of the things. And I'll tell you the reason why for that. The reason being, in the last 2 to 3 quarters, we have seen inflation stepping into the P&L of many of the companies, and that's impacting their margins. And they've been not able to push price hikes, primarily because the consumption was very slow, and they didn't want to push it. So now that you have a GST cut which is coming in, many of the companies which were sitting on margin impact may try to cushion their margin, and that's good for some of the companies, but bad for the buoyancy which the government is talking about. 48,000 crores is something which the government spoke about, that it could be the revenue forgo based on the 24 numbers. But I think Citi is looking at a revenue decline of nearly 93,000, and then there is a gross revenue boost because of buoyancy of nearly 45,000. So on a net basis, there could be a implication of roughly around 57 to 58,000 crores. That's the kind of a buoyancy which they are looking at. The deficit they're going to look at. But as the Revenue Secretary mentioned yesterday repeatedly, there is going to be a buoyancy in the consumption, and that buoyancy will come in only when the entire pass-through will happen. So I think there is a little bit of concern with respect to pass-through of this price cut, and also the fact that it has been pushed to 22nd, being the Navratra days, but from now to 22nd, people will wait for the cut to happen before they can buy. So, ideally it should have come much earlier, but
it wouldn't have, because you've got Pitru Paksh, which is Shraddh, perhaps.
But that's
why we would have
northern
delayed.
India, right? In the southern India, we are going for festive season now. Yeah. So in Kerala and Tamil Nadu and other areas, there are festivals. Kerala is going through an Onam festival, which is one of the biggest and the first festival to start off the entire for the country. And if you ask some of the FMCG companies, the trend setter for the entire country for festive season is the Kerala Onam, because and Kerala is a consumer state. It's not a manufacturing state. Yeah. So from that point of view, it is it's delayed. So you miss the entire buzz with respect to some of the southern states or some of the southern festivals which are coming in. So I think that could be one of the reasons why it's a muted response. Of course, over a period of time, it is rationalization into 2 rates. That's very good for the economy as well, because it brings in a lot of cash in the hands of the consumer. But look at the government has been doing its bit with respect to that tax cut, GST cut, the RBI doing the rate cut. All of them are adding money in the hands of the consumer, and that is going to help the consumer and get the buoyancy back into the economy.
Sajeet, I come to what the markets may be thinking, because you've still got a big question mark on tariffs right now. So maybe the markets are doing that balancing act. But to the individual sectors that you were talking about, wherein they do still see margin pressure, perhaps, irrespective of the GST cuts, and maybe the pass-through may not happen as quickly. That's staples largely?
True. That could be the staples, but white goods are going to be beneficial because I think across the board there has been a shift from
rationalization.
So that has come in. Small I think the disappointment for some of them would be the cars kind of thing, because they have retained the classification of 1200 cc and 4000 mm as one of the criteria for small car, and above that everything goes into the medium and other. So earlier, if someone wanted to buy a compact SUV, now you're paying up to 40% for that, in that sense. But for someone who's buying a luxury car, for them it's coming down from 50 odd to for 40% in 40 odd. So yeah, so that's a mixed thing. Packaged food is good because they have, on food they have removed. You had all the parathas and everything which was being taxed at a higher rate. Now all has gone. So from a consumption point of view, it's very good there. Toiletries are going to good. So HUL and others, Marico, Godrej, and other companies are going to benefit in terms of rates coming down. But that's where also the partial passover will also happen, right? Just because the rates have come down, you will not buy 2 soaps. You'll just buy
or not have more salt.
Simple as that. So it's a pass through which so those are the areas where the pass through may not be fully there, and that's going to be something of an importance for them.
So, Sajeet, when it comes to really staples, let's pick up that part of the market firstly. Is it going to be a volume game or is it going to be a margin accretive game? How should you be looking at those companies right now from an investment perspective?
It's not going to be a price cut. It's going to be a volume game in that sense. And I'll tell you because over the last 4 to 6 quarters, what we have seen is the price has remained the same and the shrinkage has happened to the volume.
Yeah.
Now it's going to be going back to it. They keep the price at the same price point, and then they will increase the grammage for many of the items, and that is something which is going to be important because that's how the companies are going to do it, and that's also one of the way of confusing the consumer as well in that sense. So it's not going to be price cut. It's very difficult for companies to bring up the price once the price is cut. It's so they will increase the grammage and they will not go for a price cut in that sense.
But Sajeet, to the point that you were making, that there's still a lot of uncertainty around with respect to how this pass-through will happen, or rather this transition period, what the companies will do. And case in point being autos, because just before that festive season, everybody is all geared with that higher inventory and ready with just to offer the consumers. For now, we have already seen Maruti Suzuki, some of these two-wheelers, they have done well. Today, M&M is the top gainer since the start of the day. But do you believe, or rather the sense that we are getting is that in the near term there can be some blips for the auto sector?
From an inventory point of view, yes, because I should tell you that because the Prime Minister announced it on August 15th, the damage is not much. Because people who were, especially the auto sector and auto dealers, they go for vehicle financing and there is no credit period that they get. So they do the financing, and so the financing has not been much in that sense, though they're sitting on 40 days. But during festive season, it can go up to 60-65 days of inventory which is there. So yes, there is an impact, potential impact for them. That impact would be borne by the industry as well as the dealers, which is going to happen, and that could be one of the reasons of saying that okay, how much of pass through will happen of the rates, because they will say okay, we are giving discounts, and that discount has been borne by us for the inventory which is there. Though the rules for those things are going to come in, I think CBIC will come out with the rules of how to manage the transition, because you will have higher input tax which is there, the GST will be much lower, and many of this entire inventory will be sold after September 22nd.
Mean that the long-term road for the auto sector is very much positive, because we were just chatting with Mr. Bhargava, and he did upped his guidance apparently for the small car, saying that 10% growth is likely for the industry, 7 to 10% growth is likely in the next fiscal. So after that near-term blip, do you believe that the markets will start pricing in that growth number?
It's also a factor of uptrend in buying, basically, right? Means small cars have not been selling much. I think except in the month of Feb or March, when we saw a brief period where the cars for small car sales went up, it has been falling. Now, assuming that a car sale with a car price of roughly around 6 to 8 lakhs, a 10% hit would be 60 to 80,000 rupees per car, which is a huge amount, right? In that sense, and I think 80 to 90% of the cars are financed in in that region. So you have a couple of things which are going for the small cars, but the question is that will a person now go for a small car, or will it upgrade to about 10 lakh car which is there? Because there are multiple factors coming into being. One, you have the tax cut which has come in, which gives you roughly around 8,000 rupees per month. Then you have a rate cut which is roughly around 100 basis point which has happened, and another 50 basis point rate cut is expected to be there in the next 3 to 6 months, which is there. And then the third is the GST cut which is coming in. Now all this is adding roughly around 15 to 20,000 per month in the hands of the consumer. They can easily upgrade themselves to the kind of consumption they want in a higher or a mid SUV or whatever. I mean that higher level car which is there. But it's up to, will the consumer come back to the shop? That's the question which is still there.
Absolutely. Let's talk about the one sensitive pocket, Sajeet, and that's clearly insurance and the overall healthcare space as well. While there's no doubt that for policyholders it's great news, but what about hospitals? What about insurance companies?
So, I think on our channel itself, we had a couple of hospitals coming and talking about the fact that we are not going to see that kind of impact now, or some which was there, right? Earlier, your input tax credit was 15%, means 18%, and then insurance was 18%. And now, if it goes to zero, what happens to the input tax credit? Now, the rates have come down for many of the hospital items as well. Life-saving drugs has gone to nil almost, or exemptions have been provided. Some of the costly cancer drugs have come down. So many of the life-saving drugs which are part of the hospital bill have already come down. Exact impact would be there, but I think it gets adjusted in the premium. So if the question is that will your premiums come down by 15% or so, the answer is no. It will come down between 10 to 12%, because there would be some impact of input tax which is there for the services, and that would be factored in the entire whole thing. And so 10 to 12% is the kind of price reduction that you'll see in your premiums, monthly premiums or annual premiums going forward. So it's good news for the insurance, especially on a single insurance and the group health insurance which is there, and life insurance. So going forward, yes. And anyways, this is not the quarter of insurance. The quarter of insurance is Q3 and Q4. So they're going to be, the maximum number of sales happen in that 2 quarters. For that, it augurs well. Whether the insurance companies are going to have pass on the entire thing, or they will increase the entire minimum insurance per policy from 2 lakhs, which they are now giving to everyone, to maybe 3 lakhs or something, so that they maintain the price point. That's a thing which insurance companies have to manage, figure out.
The other thing, of course, is the fisc impact also, right, Sajeet? Because everyone's wondering, so close to the budget, who's going to bear this 48,000 crore rupees brunt?
Actually, it's not just 45,000 crores, it's 2/3 goes to the states. But as a revenue secretary mentioned, there will be a buoyancy which comes in, and there will be some kind of volume led growth which is coming in that. The expectation is that. Despite the fact that there is a tariff overhang which is there, which is creating some kind of issues with respect to sectors which are facing external or global markets, which is. So I'm of the view that there is going to be at maximum there's chance of a revenue neutrality which will come in, and the government is aware of it actually, of that. They're thinking that the buoyancy will be so much, especially with Diwali. Navratri, Dashera, Diwali, Christmas, New Year, everything coming in, they're seeing a back-ended or second half-ended kind of boost coming to consumption, which is there. And that's visible in some of the FMCG companies, how they're going to manage the entire crisis. Opportunity, I would say.
Yeah, opportunity. Okay, let's discuss with Ajay Bagga how big an opportunity this is turning out to be. Ajay, hi, afternoon. Thanks for joining in, and apologies to keep you waiting. We were just getting some perspective on how the markets are perceiving the impact of GST 2.0 on various sectors. But Ajay, as an investor, I guess the question is going to be, because up until COVID to now, you had only played the premiumization trend. Do you now look at more top-down approaches when it comes to consumption?
Well, I would not say that things will change very much. What is changing is it's a very structural stimulus that has gone in, and this stimulus will go in year after year now, unless there is a rollback into higher rates, which we don't anticipate. So the immediate reaction of the markets might have been muted. But what I'm expecting is that all the interest rate moves that have come in, the monetary policy, liquidity being injected, overall the income tax slabs, putting on the margin some more money into people's hands. We have seen rural demand growing stronger than the urban demand. So the catch-up story the markets are waiting for is the urban demand picking up. So does this lead to urban demand picking up? We'll know in the next 2 months. But I think a very good structural stimulus has been injected by the government. What trends will it change? Will the premiumization move to a more broader based rally? That we have to see. But definitely, there'll be more money in people's pockets after their usual spends. And that normally goes back into consumption. So the consumption multiplier works when you cut consumption taxes like this. So the government has got it right. There are some issues to be ironed out, like the input tax credit, then the anti-profiteering to ensure that companies are passing on these advantages to the customers. I think those two remain the issues which has made the markets muted. But if you take all this together, I think we are setting up for a good market recovery. When that comes, what is the catalyst? We'll have to wait. Maybe this is the catalyst that we will know after about 2 months when we actually see how the festive demand passes through.
Ajay, great to get in that insight from you, and thank you as always for joining in with that.
Thank you.